The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. My pleasure to be here this 25th day of August. And what a market, huh? Yesterday opened down 500 points and then whoosh, down 1,000 points. And then it starts a very steady move to the upside. And then it was finally selling at the close. So that you closed up 500 points, down 500 points. But this is very interesting. Within the context of the market, many levels that one would be looking for were actually met or surpassed to the downside in the very short term. Now, you know how I look at the left side, right side, arch formation or cup formation. In this case, we're mostly looking at arch formations. Left side, certain point, rises to a new, in many cases, all-time high, comes back down, and then you have a measured move, basically X number of bars to the left, finding the midpoint or a most important bar from a peak D on, and then you look for the equal number to the right. And you remember, if it's not a bear phase, normally, yeah, look at this chart I'm showing you right now. This is the E-mini 10-minute chart. You see that move from there to there, and you can see it's very symmetrical from this point right here. You've got an equal number of bars to the right. Unless it's a bear phase, which is on the left, the daily chart right here of the E-minis, where it plunges and within 1 bar or 2 bars, it just takes out so many bars on the left side that speed is the issue, not time, but speed. Most of the time, you just make it a cup formation and arch formation. Market is made up only of 3 moves. A straight line move, up or down. That's a straight line move right there. An arch formation or a cup formation. Cup formation, something like that. A cup formation can have a variation being a V shape, but it's the same principle. And the arch formation could have a variation inverted V. All right, so you've just got 3 patterns: straight line, cup, and arch. Aha! Where are we? And I got a bunch of questions. I had a lot of questions and really good questions all day yesterday and last night into this morning. I will deal with them. First of all, let me just show you this 200 period moving average right here, this coral color in the 10-minute E-mini. If you look at the 10-minute E-mini with the technicals, you see that the stochastic was flattening out, didn't break under 20%, now 24%. The MACD is attempting to rally. I would not be surprised if this starts to fail later on. But in terms of the testing from yesterday into the gap this morning, do you realize that the E-minis are up 64 points? That is incredible. I mean, when you looked at the chart, when I looked at the chart of the 10-minute this morning, 10-minute E-mini, I said, oh, okay, nice rally. And then I looked closer, and the rally goes from somewhere in the 1870s or something to the 1930s, and now it's even higher. I mean, it's gone higher than that intraday. Those are huge points. So this has been really a trader's paradise. If you've been on the right side, it really has been fruitful. So where are we now? Let me just run the numbers. Let me get rid of this now. This is the 120-minute chart. I'll put it aside right there so you can still see it. I can start talking bigger picture right now. Why? Well, there are a couple of things that are going on. Let me just show you this right here. This is the Boston Globe this morning, front page. Wild ride, front page, Boston Globe. Green Line project may be in doubt. They're doubling the price from $1 billion to $2 billion, and cost overruns, blah, blah, blah. But look at this. This is the front page. And the front page has the Dow chart from yesterday, down 1,000 points, and all the text within that. Wild ride always has a picture of people staring. You could have this on the most glorious day. You could still find people looking down at their instruments or whatever it is. So these pictures are just always fascinating. Most importantly, it's a front page story. And if you go to the second section, the business section, the C section of the Boston Globe today, it says 1 inch. Market shock stokes fears. Then two columns on the left, 2 columns on the right. In between says, queasy investors may be reluctant to continue pouring money into Boston area real estate development, life sciences startups, biotech IPOs. Remember, this is what we've been talking about for how long? For months. Then big and red, because now you got color. 2.7 trillion, the loss in market value across global stock markets on Monday. China, Shanghai, Shenzhen, CSI, that has a whole bunch of charts, all right? And this is going to be very interesting. You know, the Great Wall of China, maybe the Great Fall of China, I don't know, but this is going to be very interesting. All right, let's get to the nitty-gritties. Question in the den, and that's what I really want to get to. Basil, now that the Dow Jones Industrial Average, the S&P, and New York Stock Exchange have come off highs more than 10%, would you kindly review the future bull case scenario you touched on Monday? Thanks. So the real question, of course, within that context is, am I correct in suggesting that there is another huge up phase to go? Now, huge could come from much lower levels and have a very nice percentage going to all-time highs. Remember, the 19,990s is kind of the area that has been a focal point for a very long time. I'd even say that it's been a focal point for me on the Dow for about 15 or 17 years. And in the den, we want coda. Yes, I do believe there's going to be a coda. But let's talk about that part of it. I want to go into later on. What I do want to get into right now, and I have to thank people, had a couple of people talking about my Elliott wave theory, the chart that I showed yesterday, emphasizing, which has been emphasized to me ever so long, that wave 3 should not be that tiny. It just doesn't make sense. Actually, even wave 4 shouldn't be all that tiny in Elliott wave, but definitely not 3. So, you know, I agree. There's nothing that I'm disagreeing about. All I'm saying is that I use it in conjunction with the Chapman wave. And that's why I always say this is my own interpretation of the Elliott wave in my work. And I just have to do that. I've just found, I've heard it. I know that when I studied Elliott wave back in the 80s, was it 90s? When did 80s? When Prechter was, you know, being interviewed every hour. I just found it confusing, and I have to. That's why Chapman wave just became such a big part of my work. So now let's go to nitty-gritties. All right, let's just go right through it. We'll go through the charts one by one because we had such a big smash to the downside. The Dow's up 398. It sounds like a huge number, but not when you're looking at this particular chart. We had a smash from the 17,500, 600 area, way down to the low it was made at 15,871. Let me just type that in. 15,871 right there. And I'm going to make it still. I don't think I'll make it green. Will there be a D? You know what? I think I'm going to make it green. Reason being, I believe that there's going to be an arch formation. And that arch formation could get you into the 16,500, maybe even that 9-period moving average of 16,700s. Why? Because of that Boston Globe headline, because of a number of aspects, and because we've just finished the testing. And now the Dow's up 405 after being up to 90-something a little earlier on. And I'm suspecting that the testing of the downside has just been completed. That's just my outlook, okay? Okay, now let's look at the bigger picture. Where this candle finishes on Friday is going to be very important. If this candle finishes with a Roman candle at lows, a whole bunch of things go on. It says that at some point the low is going to be taken out. Secondly, the left side, right side price time match. Look, the left side green, right side dashed pink. With the Chapman wave inside wedge suggested that we should make a low No, that we should take out the 15,855 October low sometime by the 18th of September. We've taken it out in an earlier time frame, a few weeks earlier, and that suggests that speed is important, and it suggests that you've got another chance to make this pattern that I call the arch formation. Okay, so here we are. The 9-period moving average in the 120-minute chart is right where we are at this point to 16,268. I'm suggesting that a high above yesterday's bar at 130 with a high of 16,361. That's going to be the big challenge. Can you close above yesterday's entire candle, opening candle, with it 16,004, let's call it 60? That's the first level of real importance, that high right there, 16,361. Now let's go through the numbers. The Dow, up 393 at 16,264. Major support on the shorter term is at 16,150 to 16,120. Take that out today, and you've got a failure pattern. I don't think it's going to do that. I think there are a lot of people that say, hey, this is it. We've made some kind of a low, and we're going higher. I have a different opinion. I think we've made, this is the real internal low. And the residual low could take 6 to 8 weeks to form. And we'll see about that. And in the meantime, that residual low, at any point, if it takes the internal low of 15,370 out on a closing basis more than 3 times out of 5, says not only is this an internal low, but you're going to have another internal low before you get the low that triggers the major move to the upside. Now, let me just take this away because I had to do this. I had to make this up because of my charts weren't working on TradeStation. That was not their fault. It was my own problem. So that's all cleared up now, and we've got them right here. This candle, a close sometime by Monday. If this candle closes at 16,630s or higher, you have a Chapman wave Roman candle. And that Roman candle is suggesting that at some point we will take out half the wick of that candle, which means you're going to go under 16,000. If that holds intra-week for more than 2 to 3 days, intra doesn't even have to be the full week, but intra-week, there's a real good chance that there's going to be a sudden swoon to the 15,871 level and take it out. So this is going to become one of the most important candles since when? Since October of 2007. At 14,198, we made a doji candle. We didn't, the Dow did. And that was in October. And November, you closed on the 9 EMA with a Roman candle and an inside bar. December, the final day of December, we closed under the 9 EMA, and we had to go to it from a sell signal to a sell mode. So I'll go through all the numbers. Sorry, I'm a little late here. I need to just do all this stuff. Dow's up 397, S&P's up 50, and comp indexes up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let's continue this little story here. You've got the Dow, as I say, up 409 at 16,281. The S&P, SPX.X, there we go. S&P right now is up 51.55 at 1944. So he made a low of 1861.01. That 1861.01 suggests that it's in the wick of that candle, very important October candle of last year, which had a low of 1820. Let me put down 1820 here. That's the 1820 overture, I guess. And I ran up to 134 and pulled back yesterday to 1867. So my thinking here is the 9-period moving average of 2,037 in the monthly is just way too high. The weekly chart is 2043, still way too high, and 2008 is the 9-period. I'm not sure we're going to get there just yet. Maybe by the end of the day or tomorrow I'll have a different perspective, but I'm going to draw in the arch formation, and that suggests that we could go to about the 1980s. Yeah, that's what I was thinking, 1980s. So we'll see how that pans out. 1980s, another 400 points in the Dow. So we're going to be looking at this very closely. The weekly chart, look at this. The weekly chart, left side, right side, price, time match. Oh, I did in the SPY. I think I did in the SPY. Let me just double check. SPY. No, I didn't do it in the SPY either. Okay, so the SPY has 181.92 as the left side low of October of last year. And going to that there, Yeah, so that tells me that we can have a rally in the SPY at 194.75. We can have a rally towards inside that bar of Friday, I believe. Yeah, so we could go into the 200-ish, 197.50 to 201s. That's my thinking right now. Let me just draw that in to 201s right there. Okay, that's a possibility, and all of this is contingent. By Thursday, the Dow is not broken 15,900. The S&P hasn't broken the 1906s area support, and that's going to be very important. So let's continue here. I'm going to go to the QQQ because most people trade the Qs. The QQQ series made a low of 85, I think 84.74. 84.74. That was a huge move down. And what happened was, when it rallied, it didn't rally as some of the others did, closing the highs. It kind of closed near the upper third. It was important. And today it's just broken to a new candle high above yesterday's gap down low of 102.53. 102.74 right now is the high. So that's suggesting to me that we're going to see a really interesting candle here. The big resistance is at 99, in the 99s. So the big support now is in the 99s. The resistance is right into this area here, the low 104 to 106-ish. That's going to be 107.50 is the weekly 9-period moving average resistance, and 105.60 is the daily. All right, let's go on to gold. Gold tried to rally, couldn't. It's made a leg D and then a peak D if it closes like this today. It's just an A. I drew that arch formation. I said, be careful. We got stopped out of our gold position for, a small profit, but it was a profit nevertheless. I had a question about yesterday. How did we do? Well, what happened is we had some fabulous positions, 28%, 100%, just really nice, 9%. But then I went on my update at 12:30 yesterday. I don't usually do updates. It's very rare. And invariably, I found that the prices that you can get on my update, those rare updates, the very next day you can get an even better price. Not today. What happened is we had a 300% long one of the indexes, and we had 200% long one of the sectors, just perfectly. We got in, it was holding, and then right towards the close, it just took us out for a small loss. They were small positions, but they were starter positions. They would have had fantastic gains today with the gap up because they are really participating well on the upside. One is up 4.5%. I mean, that's really big. And I just can't see the other right now. But it's big, up 8% actually. So what we're looking at here is a situation that gold is not quite the favored instrument at this particular time, but can gold at 1136 hold support in the 122 to 115 area? Just kind of hang around there and wait for the next arch formation in the weekly chart. That's a possibility, but I didn't like the action over the last 2 days, including today. That is yesterday's, where it closed in a leg D, with the stochastic still strong but pulling back and the MACD about to turn down. But it was that weekly chart that said, wow, that 9-period moving average of 1137, if it closes under that on Friday, that's just not a good sign. So the dollar, since we go to a break, the dollar is up $1.28 at 94.61, and the TLT is down 222.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I wanted to show this. I had a lot of questions. I just want to deal with this right now. One of the reasons why I was so determined to stay and attempt that short side for so long was because so many of my indicators, just Chapman wave notation, as well as the Chapman wave projections of resistance and support lines, was saying that there was a tremendous amount of resistance at the top side. Look at the Dow, 19,188, 18,609 is the monthly double. There are 2 ranges there, right? So we went to 18,351. We stopped underneath the one at 18,609. Look at the support yesterday in the 120-minute chart. 15,380 was the projection. We went to 15,370. Boy, that was quick, huh? Now what we're looking at is we've got the 17,300, 17,500, 17,600. Look at all the resistance levels there. So I don't see any chance at all of us going back to a high until we've fulfilled more downside activity. All right, that's number one. Now let's go to the SPX.X, the S&P 500. S&P 500 didn't have all those projections, but it did have tremendous resistance at 2127 and 2186, and the high was 2134, if I remember. Yep, 2134. So it went 5 points higher. But look at this with the weekly chart. The weekly chart had a ton of resistance. Look at all those. It just says that's very strong resistance, right? And that last rally to 21.25, look, it took it right there, and then we turned down. If you look at the TLT, this is the bonds. Look at all the resistance levels at 126, 127, 126 again in the daily chart. We've gone right through the 123, whatever it is, 123.66 in the weekly. And the monthly has 132, and the weekly has 133 as the next, if there's a break to the upside. But wait a minute, look at all these levels at 115. And what was the low right here? 114.88. So look at that, 5 of them right there in the 115 to 116 area. So the upside is it has a little bit more potential to move higher in the weekly chart, but it's got to overcome that whole 126, 127's area on a closing basis. So TLT is saying to me, it should pull back here, and that's going to allow the market to move higher. And one of the reasons why yesterday, after my show, why I wanted to go long is because I thought that all the criteria that I wanted had been met in the short to intermediate term. And now we should see some kind of a relief rally, and the duration of the rally depends on today's close and tomorrow's opening. That's the way I'm looking at it. If you look at, I was asked about the TNX, the 10-year. You'll see the 10-year has a lot of resistance in the 21 area. It's at 20.98, but it's also got that support at 20.03, and it went a little bit lower. So the TNX, that confirms for me that bonds could have a bit of a pullback. If you're looking at this, there's the TNX. You could rally in an arch formation. 20.98 right now into the 22s. That's a 10% rally. That's pretty good. I'm not sure that 21.90 is going to be tough resistance, but I'm not sure how long we'll stay above it before we start to pull back, because a lot depends on the general market. Now, I want to go to the VIX index. I promised that I'd talk a little bit about the VIX index, and this will lead in to what I want to talk about in terms of the long term. Now, we have seen so many of these candles where the price intra-week spikes above the 200-period moving average and then plummets back down again. Yesterday's high of 53.29 was huge, and that came about like a tsunami. Look, it's exactly like a tsunami. Huge crescendo. You know, in the tsunami, the wave goes underneath, and that really helps it build the upside projection. It's like a skyscraper. And then when it comes down with a tremendous amount of force. But that's not the issue. The issue is what's pushing it? What's the momentum behind the wave? How high is the wave? You remember the really big tsunami of quite a few years ago. Now it's quite a few years ago. Had the level of the water had risen, so that even though the tsunami itself, the big wave, would have done damage, it was the pressure pushing with the level, like talking to my friend the other day from New Orleans. It's like the level of the wall. What was the barrier called again? Oh man, which failed. Those weren't holding back the water enough. And then once the level changed, you had a massive body of water that just constantly came over the walls, because the walls had been knocked down into the areas that had broken down. And that's the issue. That yesterday was really this is the wave. It didn't have that momentum. And the momentum being the kind of cycle that you see in 1987 at the low, where you saw all those round numbers in so many of the Dow stocks, where the turnaround was so vicious that it barely made another low, as it was 1733 or something, where it didn't go underneath that. What happened was that it had all that energy had just being usurped at one time. I don't think this is all the energy being usurped. So the question I had was, can you talk of the VIX on the show today? Has it ever traded this high? You know, this is not high. This is what, 53.29, 53.29. Yeah, look at this. Let me show you some. This is the monthly chart. We've been at 89.53. In fact, we were in the 48s back in 2011 and 12, 2010 and 2011. We were in the 48 area. And then what happened was That was the 53.29 level from the October 2008 low. You see, this is what I'm talking about, the tsunami. It's not just this immediate pressure that subsides. Look how long it took to go from 53.29 all the way down to the teens. It took almost a year, over a year, in fact, over a year and a half, because there was just still so much standing pressure until we got to the 2009 low. And even at the 2009 low, there was still another incident back in April of 2010, where the VIX went down to the 15s. So that's what I'm talking about. This was kind of done and a wash, and it's kind of, that's it. Now we have to rebuild, and it's going to take a little while to rebuild. So the answer to the question, Paul, is this. Okay, so the answer is yes, we have seen it. It was actually higher than those Greek crises that were back in 2010. No, the bank one and then the Greece one. Back at, that was in, let me just give you, I don't know why I didn't put the date down. Come on, man. What's with you? 2011. So in August of 2011, 4 years ago, that's the one that went to 48, round number 48. So yeah, we've seen it before. Hasn't been as high as this for a very long time. 89.53. Now I just hope that I have the, I've redone, I don't know how many times, VXO.X. That's the VXO. Have I forgotten what the Dow is? Just for the moment. Yeah, I've forgotten what the Dow is. I'm sorry. VIX.X. Why am I forgetting? I thought it was VXO. All right, I'll get the Dow VIX, but that one went to 100 and something back in 1987. So yeah, they do go high. But this is an event, you know. Going to 53.29, normally we should get a 6 to at least a 3-month rally before we have the next crisis. I think that this is a little different. And I'm going to deal with that, and I'll try to explain it, but I do think that this is a little different. So forgive me if I don't want to be elusive. I want to just say to you outright, yes, we've been there. This is a little higher than the other two crises. This came about really suddenly over a couple of days, and that's telling me that it's here. It's going to be here to stay, number one, and number two is it's going to be sporadic. And then we've just had that, we've experienced it, and I would not be surprised if the VIX actually closes with a very thin wick this week. Oh, did it open there? So you can't do that. It opened at 51 and went to 53. So this red candle is going to stay. That's very different to the others that open lower down, spiked higher intra-week into usually the Thursday, and by Friday it viciously turned down. Ooh, this is going to be interesting. This is a red candle right up here. It means that the red candle at some point should also be full somewhere into the 40 to 41 area. Okay, so I hope I answered your question, and the answer is that no, it wasn't criminal. I know that you like to associate these kinds of events with criminal events. No, it's just part of the marketplace. Things are going on, and we've just got to deal with these things. I can't put labels to these things other than to say it is what it is. So let's go on. So I want to do that. I want to do that. Oh, I wanted to show you something else here. The VIX. VIX.X. The VIX. Did I do this? No, I didn't. It doesn't have anything at the upside, on the upside, other than 47.20 on the 120-minute chart. The support level is at 22.47. Between 26 and 22.47. 21.93. So you go 26 to 21. This whole area is a containment area. We're going to be watching that really closely. So no, it's not VXD. I'll find it. It's just people are trying to help me now with that VIX. Don't worry about it. It's not important right now. I will get to it by tomorrow. I should have the I'm sure it's a VXO. Anyway, I'll find it. Now, what I want you to do is, we didn't do, okay, Euro. Let me just do this right here. EUR USD. There it is, went to peak E in the euro, and now we've got a pretty darn good sharp pullback, but the technicals are still quite good. The week, you remember, this is what I've been drawing for how long? Months. This weekly chart is giving me the arch formation that goes from an H to an M. But if there are 3 out of 4 weeks that closed nicely above that high of 1.146, the high of the 15th of May, all of a sudden, I'm going to be drawing in something a little different that looks like this. Goes to that area right there. And I'm going to say, hey, wait a minute. I think we've got a rectangle formation, and then we're going to go to the previous high of importance, peak A minus, week of the 19th of December at 12569. Okay, so this is what I'm looking at. In the meantime, this is leg C. Nothing wrong with it. Technicals are improving. But if it breaks under 1.113, that's a serious breach of the 9-period moving average in the weekly. And finally, you've got a leg B in the monthly. And usually in a retracement failure mode, you don't get much more than a B in a monthly chart like this. Let's see what's going to happen here. So a real quick question. Now, I'd like very much to get to the question, which I think is absolutely pertinent, at least to all of us, certainly to my subscribers. Are we going to go to another high? Because if we're going to another all-time high, and you're prepared to sit out at 20, 19, 18, 22% correction, maybe it's deeper, because you say it doesn't matter. I just want the end result to be a very positive one. I need to make some decisions here. So Agrico Eagle, I don't see anything. It's a 2374. It's making the arch formation, another arch formation. The monthly chart just looks terrible. Yeah, as a bounce, you might get something. Believe me, don't let it take out 22. But absolutely, if it closes under 21, round number low, that was made on the 6th of May, AEM, Agrico Eagle Mines, trading at 2373, down 94. If it takes that out, all the patterns, monthly, weekly, daily, are going to be very poor. Okay? So now I've got, callers. I'm sorry, I didn't see the callers. Brent and Martinez. Brent, how are you?
I'm doing well. How are you, Basil?
I'm well, thank you.
I was telling Tom yesterday about that. It was a little frustrating as a trader to have positioned myself properly on Friday.
Right.
But I had a lot of puts on the triple Qs,
right,
and Facebook, and then just because of obviously so many people trying to trade, apparently, I couldn't get in to actually do it when I wanted to.
Oh, no. Well, you know, I sympathize with you because I had my own problem yesterday because yesterday was like the trading day that I had back in the crash day of May when I went to play tennis, looked at my cell phone, said to my partner, hey, I think I'm going to stop right now. I'm going back to get the low of the market. I came back just in time for the turn, and I just hit those buy buttons all the way up. I tried to do that yesterday, but I'd love to have my trade station working at the same time. I don't use that as the platform for the futures that I use, and I didn't have that, so I was kind of flying blind. I hate doing that, and a trade station was working very well, but my trade station, I had made some kind of slip up, and over the weekend, I had to wait a whole day yesterday until early this morning for it to be up and running again because I'd done something dumb. And so I understand exactly that thing. So I have different platforms so that if I get stuck in trading, I can switch to something else. And I'm going to make that recommendation to you, but I also want to talk about something else. Can you hold on a moment?
Yeah, absolutely, Basil.
Okay, we've got Brenton Martinez, California, and we've got it down. That's up 383. S&P's up 46. We'll be right back. Basil Chapman, Tiger Technicians Hour.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, folks, we're back. So I want you to do a couple of things. First of all, so you're trying to put the sell order in, and it did or it didn't go.
What actually happened, Basil, is what I really wanted to do, the trade I was trying to execute, is I had bought those puts and I was going to sell them at the open.
Right.
And I could never even get on the platform, period, to even try to execute the trade. I mean, I've done, thousands of trades. I actually was able to do one, to be honest with you. Not in my account. I try to manage some accounts for my brothers and my sons, and he had the same position I had bought for him in Facebook.
Right.
So I had it all queued up in Thinkorswim and also in his account.
Wow.
And so I was able to, when I saw, and for me, I just do everything in Thinkorswim, but I had to switch back to his account after I saw what it was trading at. I put in an order for...
So here's just something I wanted to say right off the bat. As you were saying it, I have different ways of being able to implement those things. I can use different computers or anything. If you're using a cell phone, I've not done any trading on a cell phone, so I can't speak to that issue. But one thing I will say is that when I'm away and I need to be able to get something done, if I did this even when I was in Australia, I take the telephone number so I can call up immediately and get to somebody. Even if it's a little delay, at least you can go to someone and say, count number, sell whatever it is, and they'll do it on the spot. So that's another way to overcome that. So I don't know, that's just a bit of advice, and maybe it's a little too late, but that's what I'm thinking is another way to do it.
I haven't tried that, Basil, and of course with the amount of volume, again, it was like we're experiencing longer than normal, delays. And
of course, that's the day that they're right.
No, I mean, I absolutely agree, and what I'm going to do is I'm close to being done with my job. I'm going to retire next year, and I'll be a full-time trader, and I'll be able to do it on computers and much more efficiently. I've never had a problem doing it on my phone. That was the first time, and I kind of get it. Just because of the volume, but it was a frustrating experience. So.
Because, I remember in that May thing, I just opened an account with a futures account in a different broker. I was told that they were very reliable. Open eCry is the name. I don't know what they're called, if they are broke, whatever they are, Open eCry. And that was a day that Bloomberg was, I think, 30 or 40 minutes delayed. TradeStation was maybe, it wasn't that it was 5 or 8 minutes late, which is a lifetime when you're trading as something, and it's moving in 100-point increments at a time, every minute. What I was looking at was in the Open eCry, it was instantaneous. As I hit on the second, click, 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 click. As I was doing that, so they were going through, and that was under the most intense pressure. Now, that was a long time ago, and I suspect that most of the brokers have all improved, but they haven't had a test like it in a long time. Yesterday was the first. It wasn't even such a big test because everyone saw the market was going to pull back. It was that extra 500 points that made it 1,000 points on the Dow that really started to scare everyone. I think that's when you started to get that. So all I can say is try to, now you've learned that one particular lesson, but at the same time, I'm not sure if using an iPad is quicker, whatever it is, but at least try your very best to get a backup of sorts. Or you're going to have to prepare it a little differently, always with the background sitting in your mind saying, I might not be able to get through. What will I do? That's really what you have to do. Now, I know that it's happened to me before, that I was down, and in the period, actually it's happened quite a few times. Out of the blue, I've got internet access, and that's really terrible, that is down, and I have a backup internet access as well. But by the time I got everything organized, that's the end of the show. Brad, you want to look at the Dow Diamonds? And we ran out of time. I wasn't even looking. Oh, my goodness. Dow Diamonds.
I actually went long yesterday. I'll call you back tomorrow if that's okay.
Oh, great. Okay, that's good. I think long yesterday would be fine. I'll be back tomorrow, folks. I'll be back with Tom this afternoon. Have a great day. Sorry we ran out of time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.